Yeah, hello. Yeah, who's
Hello all, I am Akhil. So I just wanted to confirm if the session had begun.
oh, so sorry. We just started. Thank you
Oh,
for pointing that out. Yeah, sorry. Yeah. Thanks, Atul.
yeah, thank you.
So,
I think one is muted, so
so shall I briefly repeat?
maybe couple of minutes.
Okay, so I just tried to set the context by showing some data, which is that the reversal of the share of compensation to employees in terms of wages and salaries, which is what you can see here, from like 56% going to employees in the immediate pre-1991 period, and 44% going as surplus to the employer, which reversed almost immediately within 3 years, and it has largely remained the same. That now about 35, on an average, if you look over the years, around 35% is the compensation to wages to employees, while the surplus is close to 65% across the years if you take an average. Can you go to the next slide? And and then I was just showing this, we were discussing this table compiled from the annual survey of industries for the same period, to see, and looking at the second column, which basically shows the share of wages to total value of output. And I was arguing that for every 10 rupees of output produced in 1989-90, 65 paisa went to labor as wages. Today, for every 10 rupees of output that is produced, just 25 paisa goes to labor as wages. And there have been variations over the year, but once again, if you take 5 yearly or 3 yearly averages to just get over the trend, roughly like it is 20 to 25 paisa for every 10 rupees of value. On the other hand, there are these, so one of the things about the, the, the debates about industrialization generally deal with two things. One is technology, and related to that is productivity increase. Now, if you look at the next column, net value added to wages, so what you can see is for every 100 rupees of wages that were paid in 1989-90, 283% of net value added was 283 rupees worth of net value added was created. Now, if you look at, however, I mean, this changed quite drastically to, let us say, around the 2014-15 period, when the net value added increased to almost 700 rupees for every 100 rupees of wages. So this, for most economists belonging to different traditions, this would be the indication of increase in productivity, because your net value added with your wage input is increasing. Now, however, what you see is, at the same time, what is increasing is also the last column, the material inputs to wages, okay, ratio. So for every 1 rupee of wage, around 12.5 rupees of material input used to be processed into output in 89-90. This increased to about 40 rupees in 2014-15, and today it's down to 32. So on an average, you can once again say in this period it is about 38 rupees. Now, this shows once again that there has been, like, it is not that it has been a very labor intensive kind of technology deployment on the whole. What you can find is that in the material inputs processed by labor has actually increased the amount of material input per unit of labor. which also kind of feeds into that argument. That is in terms of value, this is in terms of material inputs, but in a certain way, both show that productivity as understood normally under in economics has grown. Of course, Marxists would, which is why I've written that, which is also like, would for them, this is the rate, like this means that exploitation has also grown. Irrespective of where you stand on that, there is something else that is where I locate deindustrialization, which is the calculation of the profit rate. So even in the first column, if you see that profit to net value added, so this kind of adds up to what I was saying before, that the profit to net value added ratio has also increased in this period from 19% to, at one time, like the highest was 49%, and then it's come down a little bit now. But what you see is, despite that, the rate of profit, which is the total net value added divided by the total investment, okay, industrial investment, which is the fifth column, is basically decreasing ever since 1994-95, and it has hit the nadir in 2019-20, just before COVID. So from 21% to 25% of rate of industrial profit in India, we are down to 8.5% just before COVID. Okay? So this is the thing that I want to put to frame what I want to say about this process. There are various ways of interpreting this, and I will approach it through what I call the political economy of institutions. Okay? So next slide, please. So our point of departure is to look at the institutional structures of accumulation within which industrialization takes place. Okay? So if you look at India at independence, and you look at what was India's very small capitalist class, these were basically mercantile, family-owned business houses who were mainly into trade, speculation, and money lending. Okay? You also had a very semi-feudal structure of land ownership. I'm not going to address this. I can't do in 40 minutes. And then there was a huge labor surplus created all through the colonial period, and also this thing about informality, which I'll come to later. And of course, India had severe capital, technology, and fiscal constraints. So even though there was this mercantile trading class that had emerged, there was a little bit of industry that they had come to own in the interwar period. And of course, there was the isolated Jamshedji Tata and others who had like gone into industry a little before. But on the other hand, it was like industrial enclaves in a vast sea of agriculture. That's what India's economy looked like at independence. Now, the point is that all of these characteristics are only seen in economic terms, but this entire social structure within which this existed, for example, who were the traders, who were the mercantilists, who were the landowners, who were the people who constituted the labor surplus. If you look at that, there is, of course, it is all structured by patriarchy, caste, and religion, a religious ordering of society. Now, my argument is that if we are to understand what's happening today, we cannot start after 1991. We need to look at some of the processes that have happened right after independence, and then also look at what has changed since, let us say, in the more recent period, which is also more than 35 years now, almost 35 years now. Okay. So this is a quote from Professor Tyabji, Nasir Tyabji's work on this, about how the structure of family-owned business houses in India, and the nature, what was the Indian capitalist class like. So he says, surplus in the hands of capitalists found channels of high returns through commercial operations in rural land transactions and in extending funds to rural money lending. The second inhibiting feature of the colonial period was the imposition of a body of imperial company law, which, when combined with the infinite possibilities of manipulation extended by the managing agency system, diverted residual entrepreneurial strivings away from industrial consolidation. Historical processes of a definite nature are prerequisites for a class of true industrialists to come into being. Thus, his paper argues that empirically obvious existence of a class of businessmen in 1947 does not automatically imply the existence of industrially oriented entrepreneurs. In fact, that was the task at independence. I'll quickly take you through this. How did the Indian state respond to this? Through what is called indicative planning, which started in 1955 with the second plan. And essentially, uh, what you saw within 10 years is an increase in industrialization if you look at the manufacturing to GDP ratio. So the share of manufacturing in GDP goes up. You also see that something else happens. This is all from my book. I'm not like showing all the data here because it's all published long ago, which is that uh, fixed capital formation in the economy goes up in this 10-year period. Right? So this is the only period in Indian history, India's economic history, after independence, that you actually see certain indicators of industrialization at the macro level, which reflect in the way in which uh, the departure from when, let us say, what India was at 1947 happens till about 1965. Now, after that, of course, there is a series of crises which I don't want to go into. But what I want to really show you here are two things. One is that whatever happened in that period is just not a story about how macroeconomic variables operated. It was a deeper story about how this what is the structure of accumulation within which this industrialization took place. An argument is that the same things that led to industrialization also led to the subsequent deindustrialization. So if you can just go to the next slide. So I want to start with looking at what is the structure of India's, what is the unit of business in India? So usually in economics, we study firms, each firm is studied individually, and the economy is made of isolated firms which are not related to each other, is the way firms are conceived. In the sociological literature on firm, their in, intra-firm connections are explored, but not inter-firm connections. Okay? In law looks at inter-firm connections to the extent of related party transactions, but not beyond that. Okay? So for me, the departure point is to say that it is the business group, the family-owned business group. Okay, so you look at all the large business groups in India, they're all family-owned business groups. So I have done a survey of 150 family-owned business groups over a period of now 25 years. So we look at their accounts books, annual reports, uh, other kinds of literature that they publish, their own account of their histories, and also very in-depth interviews there in terms of. So out of that, there are 25 detailed case studies of family-owned business groups. Total firms studied through this is 7,500, who are all these 150 family-owned business groups on an average control, what is that? That is because I can't see what's written there. Okay. Average number of companies or firms in a family-owned or controlled business group is 47. Okay. So for every one business family, they control on an average 47 firms. They also have, if they are of Hindu origin, and I'll come to that a bit later, they have Hindu undivided family accounts interlocked into these firms, okay, through interlocking shareholdings. That's 9. So for every 47 firms, they also have 9 HUFs on an average. And then, like all, irrespective of religion, have trusts and registered societies. So you know about the Tata Trust, you know about the Birla Trust, you know about the Ambani Trust now. Okay, so basically, so for every business group, like one business group, 47 companies or 9 HUFs and 4 trusts on an average. Okay. Now, so members of business families who were interviewed as part of case studies is 300. So can we go to the next slide? So uh, I do not want to go in much detail. How am I doing for time? Not very. Okay. So basically, if you look at the Hindu undivided family, it is a very peculiar thing that, neither business groups nor family owned business groups are unique. Like that is how capitalism has mostly functioned everywhere in the world. But what's unique in India is this concept of the Hindu undivided family, which is a tax entity. Okay? And which can own property and which can participate in corporate governance. Okay, so it was like during the colonial times, these mercantile capitalists that I talked about earlier, people who were into trade, went and lobbied with the British, saying that, look, we have a different family structure to yours, and we have these joint families which are very big. They have a high maintenance cost, and so we need tax concessions. We cannot be treated as individuals. And so, from the first tax law in India, you had this recognition of the Hindu undivided family as a tax entity, which was different from the individual, and they paid lower rates of taxes. And the Hindu, as you know, was, well, you may not know, after independence, and this continued till independence. Now, after independence, when the Hindu code bills were being debated in the 1950s, and before that in the Constituent Assembly, the Hindu was defined in law and by the state. And the Hindu is defined as anyone who is not a Muslim, not a Christian, not a Parsi, not a Jew. So if you're not a Muslim, not a Christian, not a Parsi, not a Jew, you are a Hindu, and you basically, so it doesn't matter whether you are Adivasi or you belong to tribes or you have some other, like you are Sikh or Jain, as far as what code would go, religious code would govern you would be the Hindu state code that was being codified. So basically, it governed matrimony, property, guardianship, succession, everything. And it is, yes, Hindus, they're Hindus. As far as property laws are concerned, they're Hindus. Okay. So are Jains. Okay. And Buddhists, by the way. Huh? Okay. So despite making the departures in terms of socially and politically, the state law applies equally to them. It is Hindu law which applies to them. And what the state did was basically codified what was the personal laws uh, accepted in what is called the Mitakshara way of organizing property, which is where basically the continuity of the bloodline is important. So if you do not have a male heir in any generation, what you do is you adopt someone from within the caste, within the biradri, who will continue the bloodline. Okay. So the lineage has to. On the other hand, it is very strange and quite an irony that the other property system, which is called Dayabhaga, which exists in Bengal and in some parts of Orissa, what you have there, they are more concerned about the purity of the bloodline than the continuation of the bloodline. So, in case there's no male heir, then the woman, so the daughter basically, then becomes an inheritor. So this is why often there's this idea that Dayabhaga is more progressive, but Dayabhaga wasn't really progressive. It was just that they were more puritanical about maintaining the purity of the bloodline at the cost of continuation of the bloodline. So this is basically the two kinds of things. So the Hindu law was Vitakshara law, which was made universal. though in all Mitakshara areas, which is most parts of India. Now, the problem is that in this also, the HUF then got a legal sanction. So, who can form an HUF got defined as who is like any man or woman who are Hindus who get married according to Hindu rituals and customs can start an HUF. Okay. So, I will show you what the meaning of this is in real terms. And according to Hindu rituals and customs, of course, means the main custom is that you don't marry within your gotra, but you marry uh, mm, inside the caste boundaries, right? So it is called Sagotra and Sapinda. So you can't be Sagotra, but you have to be Sapinda, that you have to be within the caste. Now, this I want to argue is to show this is one institution I'm looking at, that this works as a tool for tax avoidance, but also of control of property and capital. And that will sort of link with industrialization very shortly. Uh, Now, this I've already covered, don't need to. So now I want to illustrate the modalities of family control over circuits of capital. Okay. So if you could just follow this. Now, all this survey that I did was on the condition of anonymity. There are very famous business groups here, but I can't name them. This is a medium-sized business group that I'm sort of presenting here. So to anonymize, I've just used alphabets. It may get a little confusing, but I'm sorry for that. Instead of, I couldn't be very imaginative in what names I could give them. Okay, so patriarch A from business family X is married to B from business family Y. Is this sure? Huh? Clear? Yeah. So they have two sons, C and D, and one daughter E. Hmm. C and D have a son each named M and N. Daughter E is married to F into business family Z. So we have now XYZ, three business families. Okay, two sons. Okay, son C and D are married to G and H, business families V and W. So just by marriage, okay, one business family has now got linked to like five other business families. Okay, and so like across bloodline and marriage, what you have is sort of the family structure uh, n- uh, s- involving five different business families who will be part of various business groups, which we shall see next. Go to that. So, so first let us see how many HUFs can be created by family X. Okay. Now, family X, so A was the father. Hmm. C and D were the sons, and B was the mother. So A is the karta of the HUF, the patriarch. C and D are co-parcenaries, they have equal share in the property. But the wife, the mother of C and D, are just member, is just can be a member. She does not have any share in the property because HUF is supposed to be family property. She only has right in whatever property her husband creates. She doesn't have any right on family property. Okay? Now, the law says that the moment two people get married, they can start a new HUF. So the moment Mr. C, who's the son, elder son, gets married to G, a new HUF is started. Okay? Similarly, HUF 3 as soon as the younger son gets married. Then HUF 4 is father, first son, and father's like mother and the son's wife. HUF 5 is father, second son, son's wife, and mother. Okay. Then HUF 6 is uh, the son as karta and M, who is the minor son, or with C as guardian. Okay. And HUF 7 is the younger son D, and N is the co-parsonary, who is the other minor son with his wife as guardian. Okay. So similar HUFs exist in families V, W, Z. Okay, yes. No. Yeah. Mm. Yeah. There is no HUF never dies. Okay. Uh, you can keep creating new HUFs, but the HUF never dies. Can we go to the next slide? Yeah. Okay. Now comes how this integrates into business. Okay. Now, Family X has two flagship companies, ABC Limited and DEF Limited. Okay. 5% of shares in ABC Limited are held by individuals. A was the patriarch, B was his wife, and C is the elder son. Another 3% shares are owned between HUFs 1, 2, and 4. Okay? So the company is, and those, it is these individuals who make up those HUFs. So they own and shares as individuals and they own shares as HUFs. And these are two distinct accounting entities. No, like when the HUF accounts are done, the individual is not seen, and when the individual account is done, the HUF is not seen. Similarly, 6% shares are in DEF Limited and are held by A, which is once again the patriarch, and the younger son. Okay. Another 2% is held by HUS 1, 3, and 5. So what you can see is this is called interlocking. So shares interlock between companies. So company A buys shares of company B, B buys that of C, C buys that of A. But now you have HUFs interlocked into the companies along with individual shares. Okay. Now, 8 other group companies together hold 10% shares of ABC Limited. Okay. 7 different group companies hold 11% shares of DEF Limited. Then there are other subsidiary or holding companies. These hold shares in 9 other group companies. So through all the group companies are interlocked through shareholdings. Okay? Now, HUF 6 and 7 hold 2% share in 10 of the group companies. Okay? So what you have is, now take an example. In India, most like flagship businesses that we know about, they have very little of their own investment. Okay? So with less than the total, like the out of the total investment, less than 2% is own wealth. The rest is all banks, raising from the stock market, etc. So even if you hold 2% shares and let us say the rest of the shares are dissipated among millions and millions of shareholders, okay, you can exercise effective control. You don't need to have a very high threshold of owning shares to have effective control. So when two HUFs, okay, hold the two HUF 6 and 7 hold 2% in 10 of the group companies, so they're effectively controlling those group companies. Now, two group companies, along with A, B, C, D, E, F, G, H, who are all individuals, now hold shares in 3 trusts named after A's grandfather, father, and mother, respectively. Okay. So these trusts then own shares of 6 group companies. Okay. HUFs, and then HUFs belonging to families of the people who have come in through marriage have shares in 6 group companies. Okay. The daughter, son-in-law, and the daughters-in-law, EFGH, own shares as individuals in 6 corporate entities in this group, in which now the form also changes. 3 are partnerships, 3 are companies. I can also show you later, like the use of limited liability partnerships in this. Okay? So this idea that firms are uniform is not true. There are many types of firms, and these are combined to optimize in a business group. These firms have interlocking shareholdings, and then HUFs and trusts interlock. Now let us see what these people do. Let's go to the next slide. Okay, so first is, so before we go on to see what these firms are invested in, the patriarch is a director in 6 companies, C, D, and son-in-law in 4 each, daughter in 2. So everyone is involved in, like they are directors. There is a limit that you can be a director in maximum 9 companies, not more than that. So, but through this interlock, you basically can avoid that rule in the sense that you are not formally director in 9 companies, but you can control directorships because you have family, and both by marriage and by bloodline, who will have 9 directorships. Okay, and all the women in the family are involved in active management of the trust in position of executive authority. Now, so the thing is that if there was no HUF, individual family members would need to own a much larger proportion of shares to be able to control the group. So the HUF makes it easier that you have very little investment of your own and you control a large, like you can control the business group. Now comes the other thing. So this idea, often people work on scale. I was told you're doing some intervention here in the MSME. MSME is slightly different, but here, so this business group owned 2 large, 6 medium-sized, and 2 small-scale enterprises in different states in India. So this idea that, like, small-scale factories correspond to small-scale entrepreneurs is also not true. So you can have a big businessman who has, because in India, scale is not defined by the usual way in which it is understood in economics, which is according to technology. Scale is defined by asset size. And the governments of the day, since independence, especially from the 1970s, have kept revising the definition of scale. So, what is small scale? What is micro? What is medium? Because as these enterprises grew, with the lobbying that goes with it, the definition of scale also changes. Okay? So you can be a large scale owner of a large scale enterprise in one, medium scale in another, and a small scale in a third, and it doesn't really, like, it is all part of the business group. Now, who are the owners of these factories? If you look at, 2 are public limited companies. Okay, 4 are private limited companies. 2 are owned by HUFs and 2 by partnerships. Now, if you have the usual approach that you just go and say, who's the owner? And they say so and so firm. And you just look at the firm's books and you don't really look at how is the firm connected to other firms. You do not really figure out how in this accumulation process these factories and the industrial processes located. Next slide, please. Yeah. So now what do they do? These factories were integrated into the global value chain of textile of different levels with the goods. But that's not what they only do. So that's the industrial part of the activity. But 15 other corporate entities in the group were invested in hotels, trading, property dealing, leasing, entertainment, digital studios. Okay. One partnership fund firm was doing financial services. The trust ran for-profit schools along with running temples, an old age home, and an ecological park. Okay, so we do not have industrialists who are solely industrialists. It is within this business group, one of the many functions is that they do, if industry is profitable, they'll do industry. But if it is not, they have this institutional structure, the family owned business group and the HUF locked into it, where basically you can your other activities, the diversification that you do into other activities, ensure that you have quick profits. And then there is management of account books and what is called use of shell companies. So see that on an average, 16 of the 26 corporate entities the accounts books. Okay. So most of these companies show themselves as loss-making companies because they can transfer things between the HUF and the companies and individuals. So they keep doing that, and this is called related party transaction. Actually, these are related party transactions, but why they are no longer under scrutiny, I'll come to a little later. The reason being that we've shifted from external regulation to self-regulation with the new companies law. So basically, companies are supposed to, what they need to declare is much less. So there's much less transparency. And what they are supposed to declare that they are not doing related party transactions. So everybody will say that. It's only when some transaction goes wrong, people start fighting, they go to court, that is when it comes out, or they go to the industrial tribunal, that's when it comes out. So what people, so this is also very useful in spreading your profits uh, with among these various entities, so that because you report profit and loss every unit wise, right? So you can show that and avoid taxation. So also you can distribute your employees over the group companies to ensure the minimum possibility of formation of trade unions. Go to the next slide, please. So we can skip this. This is complicated. Okay. Let's. So some of the other things, like you can hold land. So the HUF holds land. It leases it to a company which is owned by the same family. Okay. And then, like, that company sets up a factory on that land. Okay. But there are different owners here. Okay. And these will not, so in financial statements, it will appear that someone else owns the factory, the land on which the factory is. And so the company will show it is paying a rent while it is all in the family. Okay. So one of my students, Ravina Naz, in 2016 studied the largest Indian business group at the moment. And she showed that around 64 out of 88, she found 88 interlocked group companies. Okay, I'm not naming it. Okay. A reported loss in, you all know the alphabet, right? So reported loss in 2 consecutive years in 2013 and 14. So 64 out of 88 companies. Okay. And related party transactions are, if you say that I'm doing a related party transaction, and if the board of the company says go ahead and do it, then it's legal. Okay. Now, given that you have all these family members through marriage and through kinship, and then like this entire structure, then which board of the company will say that this related party transaction is not okay, right? So, and it is, so basically such transactions are blessed by the legal sanction of the corporate governance structure interlocked with the family. Now, we also did interviews with the mother, daughter, and daughters-in-law. And what you find is that women are married into these families mainly through alliances that are brokered by the family. But there are some marriages of choice. But the thing is that what is maintained, whether there's marriage of choice or whether it is like family brokered alliances, it is that the only thing they are interested is that the caste equivalence is maintained, but ethnicity can be different. Okay, it's like the royal families in India, where ethnicity didn't matter, but royalty mattered. So royal families married across ethnicities. It is the same with business groups in India, that marriages are across ethnicities, but the caste rules are maintained. Can we go? I mean, of course, there are some exceptions. So now let's look at tax avoidance. So there are 3 individuals, X, Y, and Z, who are brothers. Each brother is married and each of them have 2 sons, each of whom is also married. This is a different example, just to show how this works, because it would be very complicated to show that entire thing. Now, they have a firm, XYZ, the 3 brothers have a firm called XN Brothers. Okay? And this is a partnership firm. So let us say they earn, it's a small partnership firm. Their earning is 12 lakhs each. It is nothing today. Okay? Now, in the absence of any HUF provisions, X, Y, and Z, and I'm talking about the old tax regime 2015-16, their family income would be 36,000. After standard deductions, they would have to pay 5,55,000 as taxes. Okay. Can you go to the next slide? So this is the calculation. Okay. All the standard deductions applied. So for this, the total income of the family is 36 lakhs. individual incomes are. So each individual would have to pay 1,85,000 and the total. This is how tax law works all over the world. Most of us salaried people also work on this principle, and it's deducted at source. We don't have any choice on it unless you have other income and investment. Now look at when you have HUF. Next slide, please. So now you have so many HUFs that can be formed. You know the logic, right, of how these can be formed, which I've shown you before. So this family basically has 10 HUFs, can form 10 HUFs because of the number of sons and marriage. These are the two things that matter. And so what they do is they distribute the income, saying this is for maintenance of family across all these HUFs. So basically, immediately, the total income, which was 36,000, when you distribute across all these tax entities, the total tax payable comes down to, for each person, 11,667, which is they pay about 35,000 total tax. So 5,55,000 reduced to 35,000 through the use of HUFs. Okay. Now, next slide, please. Now I have macro data, which I'm not going into because I really wanted to focus on the institution, how it works. Okay. To now, we've also surveyed case law. So when do you get to know about HUFs? Only when they fight. So they go to court, and then there are court cases, and then you can find out how things work. So we classified, like we looked at about 100 cases, and we classified them into 8 things that how HUFs are used. So one is to keep property within the Hindu family, which is of course the main thing, based on male line of descent, using the definition of the Hindu as adopted in the Acts, which I've explained to you. Then the splitting of income between individuals and HUF for the purpose of tax avoidance. So what we found through our accounts book, study of accounts books, we got corroboration through case law, because when some HUF came up for some inquiry, that is when this thing becomes apparent. So then what they do is to evade large amount of taxes, which I also showed you. They enter into complex transactions between HUF and group companies with same person as Karta and Chairman. So basically you just keep doing related party transactions blessed by the board. Okay. Then you gain benefits of tax exemptions and capital gains, because if you were only an individual, you would have to pay for the entire capital gain. Now you shift some of the capital gain to the HUF, so you get a benefit out of that. Okay. Then you hold land of enormous value. This was very interesting. Okay. And then claim that you received it as dowry of ancestors. Now you can't say you got it as dowry yourself, because dowry is prohibited by law. So what you say is you got it as dowry from your ancestor, like some ancestor got the dowry before the dowry law came in. Yeah. Then there is interlocking of funds and assets, which I showed you, and then to make profit. Now this is like, you know, how the share market works. So for example, a stock is going down, so then they start buying and selling within the group companies and the HUF. So this is what they call uchal, bringing uchal in the stock market. So uchal is, what would be the English word for? Yeah, to like raise the value of the share. So if there are more transactions in the share, immediately the share becomes visible. It seems to be that people seem to be having, there seems to be a demand for the share. And so other people will then buy into that. So this is one of the ways, like profit from speculation through like deciding that, okay, we need to raise this share. So you do buy and sell between the HUF and the company. And then we found this very interesting case that where uh, one HUF took a loan mortgaging a land, a piece of land to a bank. Okay. And then they transferred the name to another HUF, the title deed to another HUF. And then 5 years down the line, the second HUF went and mortgaged the same land to a different bank for a loan. Now, if you were an individual, you couldn't have done that. Okay. But by this transfer, you can, like, same property you can give to like different banks. They don't check that much, right? Like, they'll only check when you are a small individual. If you are big and like, okay, this is the HUF, this is a different HUF, that's fine. Like, that's so there are, so you can see the different ways in which the HUF forms the basis of institutional accumulation. Next slide, please. So it's an interlocked corporate governance structure, and this is what is unique to India. And there's no systematic compilation of data where the Indian state on interlocking tax entities or interlocking corporate entities along with family entities, because these work in silos. Family is governed by personal law, religious law, property rights, etc. Corporate governance laws, company law, etc. Okay, and then tax law is an entirely different thing. And even in law, that's how they study it. Tax lawyers know something about corporate governance and vice versa, but they don't know about family law, or they know only to the extent that is necessary. Now, but what you can see is that this interweaves personal law, corporate governance structures, and tax regimes and laws, where basically you have two things. Okay? The first is that, of course, there is a benefit to being Hindu in accumulation as opposed to non-Hindus, as defined as who is a Hindu. Okay? So the second is that there is a material basis. It's patriarchy is not just a mindset, heteronormativity is not just a mindset. There is also a material incentive for these things, because the more you have sons and the earlier you get them married, the more HUFs you can have and more possibility of accumulation. I'm not making an over deterministic argument, but just to say that there is a material incentive in our corporate group structure and our regulatory structure that gives this material incentive. And so you will find that if you have friends or you yourself come from business families, you would be familiar with this, the intense pressure to get married, not on just women, but also on men at a fairly young age. Yeah. Can you just go on? So now, why is this important? Because 60 to 70% of total value created in India is controlled by the family-owned business group. So if you look at the Indian market, it was 40% in 1990. Today it is 60 to 70%. Okay. So basically, the Indian nation state has enabled and legitimized this structure since the 1950s. And what you see is that this has two kinds of uses. Okay? The first is that you are immune to risk taking. Okay? And the second is that as long as you have this structure, you do not have any compulsion to really make investments which have long gestation periods, namely manufacturing. Okay? So the same families which were in manufacturing, and if you knew from the 70s and 80s, are the people who have got into manufacturing. The rest, what you find is from the 1990s onwards, you do not really see like very focused uh, investment in manufacturing, because if you have this structure, then unless there is an external push on you, you wouldn't really uh, invest in manufacturing, because you have this thing makes you like gives you so many avenues that even if you were into manufacturing, it is only just like one of your many things. And you, if you are have taken a risk and you have some anything adverse happens to you, you can immediately move to other things through this very flexible and institutional structure. And no law of the land really addresses this structure, because it's like the elephant in the room with like people who have blindfolds. So you feel, and whatever part you touch, you think that is it. But the entire thing is much bigger than those some of the parts. Okay. Now, Do I have time? Otherwise, I can stop here.
So 5 more minutes,
Uh,
10 more minutes. It's almost 12:40 now.
yeah, so I mean, I can just wind this up and drop the second part. Okay, so basically, so I am not going into the other institution, which is how labor is structured in India, which is what I wanted to talk for 15 minutes, but that's okay. Even if we get this, this is good enough. So the main thing here is that if you look at the post 90s period when India is integrating into the global order, and this global order requires two things from India. Okay. And this is a time when two other things have happened, which is that financialization is like the process that is driving global capitalism. There is something called a new international division of labor, where manufacturing is shifting from, let us say, the advanced capitalist countries to various developing parts, and especially China. And however, it is in this situation that opening up becomes suddenly the prerogative. Like all these business groups really want the economy to be opened up, except for Rahul Bajaj and a few other people. Most people wanted the 1991 thing. It came from within, it was not imposed by IMF or World Bank. Now, why did they want it to be opened up? Is because they wanted to go and invest in other places. It wasn't that they were looking, they were dependent on investments to come from abroad into what they had, because they had a very secure way of consolidating and keeping their property. So the regulatory structure in India, what it did is that when this shifts happened, and this was a time when basically uh, attracting manufacturing could have been an option. But this is precisely the time when we gave up that external push that I was talking about, which existed in the 60s, which came from the state in terms of indicative planning and an industrial policy. We dropped both. Okay? And we went for what was considered to be, and whatever little manufacturing base had been created for the public sector, we just decided that that's not worth it, give it up. But actually, here that we are sitting, um, if you look at the Jindal Group's history, okay, then the first steel plant that they set up, it wouldn't have been possible without the investment into public sector steel in Vizag, which basically formed the which provided the intermediate inputs for the Jindal's first steel plant. Okay, so it is important to understand that that external push from the state was important in whatever industrialization happened, and the state, it is not just that the state gave up on that, which is the usual narrative, okay? But it also that the state perpetuated something else, which is this institutional structure. And at least in the previous period, there was some concern about monopoly. Briefly, we had regulation of monopoly, a very short lasting legislation called MRTP. Then we had like periodic, at least concerns. It was a political concern that there's monopoly, there's concentration, this is not good. But today, what you see is that the entire, so the shift from 1956 to 2010 in the Companies Act is that of the basis, the argument is that you move from external regulation to self-regulation. So and you have to do less compliance, because compliance is bad for business. So ease of doing business is required. So they don't need to be compliant with so many things. So they can just declare that we are compliant with everything. Okay. So as long as you have you've shifted to self-regulation, and you already have that self-regulatory structure in the form of the family-owned business group in India, which also has a particular and it's quite unique. No theocracy in the world, I looked for this, has something like this for the people following the majority religion. It's something very unique to India. Not even when Nepal, when it was a Hindu theocracy, had any special privileges for the HUF. Okay. We can go into that's an entirely different discussion about like what does this mean for claims about being India being secular and all. But even in terms of looking at the question of industrialization, we never really had an institutional structure that could sustain industrialization and make industrialization an objective in itself for development. I'll rest my case here. Thank you.
You so much for the talk. It's a fantastic explanation of how social structures condition and determine economic accumulation, and it reminds us that we shouldn't keep the two separate. But I just have a few questions with regard to the deindustrialization aspect here. Shouldn't something, a family structure like the HUF, which allows me to shift losses across entities, shouldn't that make me more risk taking because now I know I can offset a loss by just shuffling it around? So you in your talk you had mentioned that this stops industrialization because now we're more risk averse with this, but shouldn't it have the opposite effect? I mean, this is just like a confusion I have. And in the first slide, when you showed the falling rate of profit, and you said that the falling rate of profit is an indication of deindustrialization, that's where I'm a little confused about like how do we take a falling rate of profit as indicative of deindustrialization? Because in mainstream theories, you can have falling rate of profit with economic growth, and even in the Marxist theory, the falling rate of profit is an indication of crisis, right? When the industrial sector spreads. So how do we take it as an indication of deindustrialization? Thank you.
Okay. So yeah.
There is also an element of, you said that there is a cheapening of wages. How do you then make sense that there is also cheapening of wages, but that is not leading to industry?
Yeah, because I didn't do the second part. So, you see, the two questions you asked are related, and the way I see it, there may be other ways of interpreting it, is that the risk, they're not risk averse, but they are willing to take risk where there is quick profits, which is the mercantile nature of the Indian capitalist class. Okay? And that has not changed since independence. And one of the reasons it has not changed is because you have this group structure, okay, where you can carry on with the mercantile nature of things, which is why they've taken so much to trade finance, hoteliering, etc., but not to, let us say, industry in the same way. Now, so the risk, it doesn't make them, there is no compulsion. Like when you had indicative planning, you had a compulsion that if you, and also incentives. So basically, if you invested in, let us say, a sector that didn't exist, the new sectors, then you got certain things from the state, etc. Okay, and that basically, and the state created the industrial base for you through the public sector. Okay, so in that position, Mr. Jindal invested in steel, so did, let us say, Dr. Reddy's came up with pharmaceuticals. I'm talking about the new capitalist groups. Of course, the Tatas and Birlas already expanded rather than like. And the best example is Ambani, because with each kind of change in indicative which areas, they just did backward integration and went into that. Okay. But if you look at all of these groups, so Ambani's main thing is extraction, like, right? That's where it is. It's not industry in the way we understand it. So the two things which basically sort of, you have to have you have to be exposed to competition, which will then lead to technology, like you're developing technology, and that's how through industrialization you're supposed to go up the ladder. Now, if you have this kind of a structure, you do not need to think about really sort of, because you're making profits, so you wouldn't want to, why would you want to be exposed to A, competition, and B, why would you? Nobody wants to be exposed to competition. Okay. And the second is that why would you want to invest in technology? There's no incentive, there's no push here in this structure to make you, because you can always just keep doing this, like what is called, what today has been almost become like a theorized as jugaad, but like it's not jugaad. This is like a way of doing business, okay, which is something that can keep perpetuating your profits from other sources, okay, which is where then that's the industrial rate of profit, okay. So if the rate of profit in industry is decreasing, and my argument is that it is because you are increasingly, what we are having is a process of labor cheapening. You cannot, like, if you are paying 25 paise now for every 10 rupees of value, you cannot like kill your people, right? They have to live to work for you. So you've reached the nadir there. Yeah. So now the way in which this was going on is that for more and more capital intensive work, labor cheapening was the process through which industry was maintaining its profits, but it has reached another. And so you have profit rates falling. Now, when you have a structure like this, there is no incentive for you to continue in industry, yeah, or expand in industry. This provides you a very easy way of diversification into where quick profits can be made. And that's exactly where we are going. If you also look at the macro transition in the Indian economy, which is from manufacturing to services, and services basically construction, real estate, uh, and basically the financial services. Okay.
Could I just
Yeah.
add? I mean, if I have a cheapening of labor, shouldn't that raise the labor?
So this is okay. Now from the no, I'll answer this because this is important. See, Marx talks about two tendencies. Yeah. One is that there is a tendency for what he calls the organic composition of capital to increase. Okay. The total investment, C plus V. Okay. And the opposite tendency, he says, then the only tendency that the capitalist has is that they increase the rate of exploitation, which is basically what the data is showing. But that's what I'm saying, that it is not a process you can continue where you kill your workers. So when you have reached 19 paisa for every 10 rupees, you are literally now going to kill your workers, right? So that's where that process. Yeah. So I have an argument about it, how newer processes are, so how citizenship is being deployed. So while I'm not saying that all social conflict is economic determinism from an economic, but there are, like, so for example, different kinds of displacements because of, let us say, mob lynchings, etc., which also lead to cheapening of labor. So new modes of labor cheapening. Some other people have worked to show how modes of labor deployment are changing. That's what the second part was. So like new forms of bondage. So jodi labor in construction, which is family labor. So basically, which is cheaper than if you had the woman and the man individually working and the child comes free. Then there's sumangali labor, where women go and raise their own dowry, even though it's now supposed to be like banned by law, but it still continues. And this is like the one of India's biggest export sectors, hosiery and textile in Tirupur. It's an export hub. That's where it exists. So there are people who've argued that it is modes of labor deployment that is changing. I've also shown that people are being reduced to doing marginal work more than main work. So then there is a lot of what is called shadow work, like intensification of labor. And those are the processes through which you carry on labor cheapening. But it is still, you are not able to compensate for the or technical composition of capital changing. I think I've answered your question as well on cheapening of wages. Yeah.
So firstly, I'm completely fascinated by this. Okay, I have no idea what, I didn't even know that HUFs were there. So I'm in a different. So, it was a bit complicated. And one thing that impressed me um, is the complex nature of how embedded this thing is. And that leads me to think about when they actually got these concessions from the British. I'm wondering, was there a template or a structure existing before that or something of this sort, this HUF, which they thought they have now been able to sort of adapt into this modern setting? Is there any precedent of something like this existing before?
Okay, that's a very, it's a question I would also need to reflect on, but the little that I know about this, which is that it is from the 1880s when a series of regulation around business and finance. So, for example, the factory 1870s, 1880s Factories Act. There is talk about regulation of work. Income tax codes are being proposed for the first time. It's in this situation where, for the first time, there is a tax on income from business. Okay. That's the time in which this lobbying starts with various associations of, which are basically caste groups, but the caste groups are people who, these are caste groups who are employed in trade, business, money lending, who start lobbying the British, saying that they don't want to pay so much tax because then that would leave very little for themselves. And this was something that actually had a appeal across social class, because, of course, the subcontinental structure, because of the underlying property relations on land, was joint families. But the cleverness was to say that only Hindus had joint families, yeah, and not others. Because if you see, across religions, it was the joint family structure to claim that it was something peculiar and very specific to Hindus. And this is also the time that the British were carrying on the divide and rule policy. So uh, basically, this was also a counter to the Muslim landlords and the the competing Muslim businesses like Bohra Muslims and the Malabar Muslims, who were basically the competitors to the North Indian, Western Indian Hindus, caste groups, in terms of this sphere of trade finance. So that's all I could say. Yeah, yeah.
At the time of independence, Parsis are also a big
Hmm.
industry, and they are outside this.
Hmm.
So first of all, it's a bit surprising that there's no lobbying from them.
Hmm.
And the other thing is that, so in the environment of HUS, is that a reason why they have sort of gone off the ball a little bit?
Yeah.
in terms of-
Yes, I think so. In fact, if you see, even the more Bohra Muslims and the Parsi groups have both kind of, my argument has been that in the post-independence period, there's a Hinduization of the capitalist class. The capitalist class was much more diverse, though small, at independence, but all through this period, what you see is that somehow the Parsis and the Muslims, there were also Jewish business groups, okay, and Christian business groups. In fact, if you know about the pharmaceutical company Cipla, it is actually the founder, he was, his father was Muslim, but mother was Jewish. So, yeah, if you look at the Jinnah family, for example, once again, it's not just Muslim, it's Muslims and Parsis intermarrying. Okay, so you had a more cosmopolitan Parsi, Muslim, Jewish uh, business class, which is now sort of faded off. And this is one of the questions that triggered my thing, that why did this change? Like, why do we see this change? Because it also has a reflection on how our society is today. And that kind of, the one thing is like, there's no talk about the HUF. And when I present this in more hostile circles, let us say, the immediate response is that, well, it used to be important in the globalized world, it's no longer important. But the Indian government, after 1989, stopped disseminating state level information on HUFs. We've done work at the also to look at, and what we found is till 89, there was a clear mapping that the regional centers from where you had growth were also the places where HUF was growing. Okay. So Western India and parts of, and the only departure is Southern India, because South India brought in laws, Tamil Nadu, Kerala, Karnataka, and also Maharashtra later, to basically whatever they could, which is at the state level, you can stop, like you can disrecognize the HUF or like ban the HUF as a property owner. So they could not, in what the state controls, which is land. So the practice of HUFs became much less there because of this. Okay. But were HUFs growing till we had state level data? Delhi, Haryana, yeah, Punjab, yeah, uh, mm, and of course Gujarat and Rajasthan, but not, let us say, Bihar, where it was constant. Okay, because there wasn't much like at that point. But today I don't know what's happening, how many HUFs are growing in Bihar, because the government is not giving us the data since 89. Now, if you look at the other thing, which is the taxation rate of the HUF pays even lower than individuals. So the effective taxation rate after all exceptions, not the actual taxation rate. Actual taxation rate became same for HUFs and individuals in 1970s. Before that, they paid, even the statutory rate was less. But what is effective taxation is when you, like all the discounts, everything taken, right, what you finally pay. Okay. So for individuals, it is salaried people, it is 11%. But and corporates pay around 19-20%, and HUF pays 8%.
Students or online participants, I was running, we are out of time, but in case if
We
anybody-
started late also.
So anybody? Akhil, I'm used to cold calling him in the class. But... Okay. So I just have one quick question. Because when we try to understand caste and business, and from my little bit of reading of Harish Damodar and how he's talking about the different business groups and old capitalists and new business groups. So he's also talking about his professional classes of people who are coming up now to engineering and others. Like we have the startup culture, we have so much of MSME narrative going on. Now, in this context, do you think HUFs are still very prominent and they have still their hold, or is it changing? Is the composition changing and this, so in that way, because you said we do not have, we have never had an institutional structure conducive for industrialization. Is it changing now?
You see, if you are a Hindu male and you've graduated out of a good institution and become a professional, then you get married and you earn high, and you then get a chartered accountant. The first thing the chartered accountant will tell you is open an HUF. Okay. So what we have found is that the growth in HUFs is among the middle class professionals in the post 90s, And when we talked to chartered accountants, that's what we found out. So basically, if you are a Hindu male married to a Hindu man married to a Hindu woman, then the first thing to do is this. In Delhi, like when I had presented this in one seminar, a lady who was from some like uh, an European a white European came and told me, now I understand why my landlord takes two checks from me. One is for the house and the other is for the furnishing. The one for the house rent is for the individual. The one for the furnishing is in the name of the HUF. So that tells you, that I think answers your question. So HUF goes far beyond the, like, whether you own an industry or not. But if you are going into that, then the HUF, your chartered accountants will definitely find the right mix of things for you. Okay, and HUF will be one of them.
Session gives me a lot of ideas that we should do in the School of Banking and Finance, which I'm also part of, because I think a lot of faculty would be really interested in understanding these aspects also. Okay, so there are no more questions. Okay, we'll wrap the session up here. So thank you very much, Professor.
Thank you.
I'm really here. I think it's been a wonderful session and a very new entry point. I think not many of us think it in this sense, and how to even bring capital accumulation and other kinds of aspects together. That's very rare for us to come across. Thank you.
Thank
very
you so
for
much.
that.
I'm
And,
very grateful.
Please, small memento of that.
Incomplete lecture.
Yes, yes, yes. Exactly. I should have organized it for a 2-hour lecture. Maybe. This is
Please.
do the honors.
I'll just do that and one cheese gift to Ravinder, please.
Okay.
Yeah. Thank you so much, ma'am. I think you mentioned about the school taking part of the conversation forward. So we'll regularize your
Yes.
visit to
thank you.
campus. So, ma'am, each of the colors represent a school at the university.
Oh, wow. Okay.
So this is for you. I know the weather is changing, but this is a small
Thank you.
ritual.
Thank you so much.
This Dr. Avninder is also part.
I know.
Thank you.
Chalo, we'll start it together. Kanti.
This is
Oh, this is a docket, right? So this, I mean, this is a bunch of documents on what the office has been doing.
Okay.
So please, when you get a chance.
Yes, I
to
will.
read.
Definitely.
So this is for you. Thank you. Please come, we'll get a picture, guys,
Yeah,
quickly.
yeah.
Amlan bhai, please. Pachi, please.
okay. We
come.
can, I think.
Only if you don't mind.
Yeah.
For those who don't. mind.
Is this is a better
Pachi,
space
when
for
are you
photo?
presenting the study?
They ask.
No, you worked out a date? Kanti and you guys-
Yeah.
okay.
To see you, Professor. I
Come.
don't remember just when we
We
had
are
go to
almost
that
done.
book discussion that we had. I didn't have a question on.
Yeah.
Come.
Yeah.
Can they come?
One second, where are you? If we are still at the venue, so you can travel to the venue. Yeah.
The-
Please come join. So I should thank my students for being here and paying attention. And they really, I
Very
think
good.
some of them are from business families, so maybe
Well,
they're.
I
Oh,
saw one of a few of them
Picture.
kind of having that thing. Yes, I know, kind of.
Yeah, yeah.
this,
I think more
Come,
related.
guys, quickly.
Initially, they're undergrad first year students. I was worried how much they can grasp, but they seem to have really. Some of it can come.
Guys, come a little bit. Thoda idhar aa jaओ.
Yeah. Yeah.
Thank you.
Thank you so much.
He's fantastic in terms of how he clicks photos.
I didn't ask the pertinent question on banyas. I got remember the discussion that
Yeah.
we had on.
I will just add something, ma'am, because I have to get to Delhi. So as part of the MSc Development Practice Program, we will be doing a series of masterclass workshops with professors in Delhi, even students in Delhi.
ठीक
So we'll be in touch.
Yes,
because
definitely.
that will just
Okay.
regularize the
Yeah,
way for
okay.
us to be. Let schools then take
That's right.
take their time.
Thank you. I'm very grateful that you invited me. Thank you.
Thank you so much for organizing. नहीं 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 कुछ।
Okay.
I have to sit on.
Yeah. Have a meeting, conversation maybe on Monday. This Monday, and then I will start.
So if there's a possibility and we can keep it, like, it can be Zoom where I can bring my class.
Yes. Actually, depending on the expected audience, we can.
I'll ask my students today if we, what is the time that works for you, like 2:30 time?
Yeah, anytime. Anytime.
Such an excellent eye-opening lecture.
Thank you.
I teach Marxist political economy, but
Okay.
you know, the classical stories that we hear is so different from the ones that you are see,
Yes.
because you would imagine that with some of these big businesses, let's say Adani,
Thank you. Yeah, I was looking for something to put up. Yes.
they are going abroad. So you would imagine that they are constantly under the pressures of competition. So they would be forced to, adopt technical things which are at the, but what you are showing is at least for operations within India, that is not the case.
In fact,
And one just small thing, if I can just say, was that you said, and this I understand also, that the CII was very keen on the opening up of the economy, but Fiji was not. But why would they be interested in the opening up of the, so these are different groups of industries.
Walk towards lunch and talk.
Yeah.
Yeah, so, see, Fiki wanted, internal liberalization, everyone wanted.
Huh.
It was only on the external liberalization. that
Because we
there
don't want to
was-
face the competition.
Yeah, but there was also, like, for example, this, sorry, there was.
Is this yours?
Yeah. There's also in the, like, even within Fiki, not everyone was opposed.
Not everyone was.
No.
Achha.
So it was only what they call the Bombay group, which
Ah.
was like Rahul Bajaj
Ah.
led a few people,
Ah.
few industrial groups.
Huh.
And in 2-3, oh, thank you so much. In 2-3 years, they also.
Because they also were, I think they were also successful in pushing back some of the export regulation. They were able to push back
For a little while.
and then again it restarted slowly because I think they were not. I don't remember where exactly I read this. Part of it is I think Chibber, which you mentioned. I still haven't finished your book. Right now I'm reading the book. So is this some of the thing that you say here?
Yeah, but this, I mean, it's there in a brief form.
Yeah, in the mercantile
Yeah,
section
yeah.
there was.
In chapter 5, I think there
Right.
is a, but this work is later published as an article with a student who actually then has done his PhD and he's now got it on Ambani and Adani groups, case studies. So
Very
you
nice.
may be interested in
I am
inviting
very
him
because what I'm
as
trying to
long
now.
as, but once again, I'm more worried about his security.
No,
so- But he has really good, like.
right.
work.
Because one of the things that I've been, I'm interested in many political questions. So one of the political, I think we should just go on.
We can hold it.
yeah.
No, I was saying that was too much of. I think.
So one of the things that I am currently working